The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Our stock of the day is Rio Tinto, the miner, confirming that it has approached Arcadium Lithium regarding a potential takeover bid. Rio saying the approach is non-binding and there's no certainty that any transaction will be agreed to or proceed. Arcadium shareholder Blackwater Investment Partners calling the approach opportunistic, saying the offer of between $4 and $6 billion would significantly undervalue the lithium company. Arcadium's market cap was $3.3 billion at Friday's close, but in the wake of its bid, the stock has surged today. If successful, the deal would make Rio one of the world's largest suppliers of lithium behind Albemarle and SQM. And there you can see the movement this morning, 43% higher, in fact, eclipsing $6 for Arcadium Lithium. All right, well, let's see what our experts think, whether it's a smart move from Rio. Daniel, let's start with you. And in fact, I think Rio's already got a project or two in the vicinity of a couple of Arcadium mines, has it not?
Yeah, no, in Argentina, it certainly has the Rincon project. And funnily enough, it's a little bit too little too late for Rio. They've already sunk, they spent about US $1 billion acquiring it and have sunk already a couple $100 million after that. I think they would have done a lot better to just wait and put that money straight into the Arcadium deal, given the valuation it's trading at and how many assets it owns and its production base already. So, look, I think it actually makes a lot of sense, and analysts have been flagging this for a long, long time. Particularly, I think there's some really good research published by Citi on this exact deal, 6 months ago. The fact is that Arcadium was trading well below the replacement cost of its assets, let alone, the upside potential if the lithium market recovers. And the supply chain that Arcadium has is quite advanced with the merger that it did, in the US. Obviously, that was a business, came out of FMC Corporation, which had a long history in the lithium market. So, look, it is a complex, deal because of the structure that Arcadium is now with all of the mergers that it's been through. But in my point of view, they are pretty solid assets. At the end of the day, talking about materiality, a few $1 billion to Rio isn't much. If anything, if the deal gets done, it's probably going to be at a lower price than what BHP paid for Oz Minerals. So, not a lot that Rio have to fork out, in my point of view, with, a large amount of upside if the market recovers. But it just depends on whether or not they can agree on a final price, which price at the end of the day will determine, future returns for Rio, and it will determine whether or not shareholders are willing to accept, which, coming from the comments from Blackwater, a lot of shareholders probably wouldn't be willing to accept a price, which is probably 60% down from all-time high, and still, I think in my point of view, below fair value.
So does this make Rio more attractive then? Would you be buying it or just simply holding it?
Look, it does come at a price. I think if they get it done at a good deal, that could be accretive. It would be more interesting. But given the recent rally in Rio, I certainly think it's firmly a hold at this point of view. But if the deal gets done, it kind of adds a large out-of-the-money call option on lithium for Rio. You look at its Judo project in Serbia, which looks really good, but that's had a lot of civil unrest. I don't think that's ever going to get built. You've seen photos of massive rallies and protests. So to enter lithium, I think it's going to have to be through M&A for Rio. And this makes a lot of sense. It just depends on the price, but all in all, hold for now, Andrew.
All right. Okay, Mathan, the synergies doesn't make sense to you?
Look, it's lunch money for Rio. I think the best way was how Dan put it. It's an option.
Yeah.
If they kill it, you go, yeah, it's a great thing. If it doesn't happen, it just disappears as a write down. So it's a nice bet without taking too much, betting the house on it. But the timing is everything, isn't it? I mean, the stock, Rio's bounced, 20% in about a couple of months. The short covering out of the banks into the miners play. ETF play, all of that boosted it, and nothing like M&A coming back into the game when your share price bounces hard. So it is timing. I mean, you got one struggling and one's had a good bounce, so it's logical. And Dan's right. I mean, I think it is going to be tough in the lithium sector. Again, we don't know the fundamentals hasn't really changed. I mean, yes, lithium's had a bit of a bite because everyone thinks now, trying to pick the next one that's going to be M&A. That's the usual market's sentiment. So, I don't think that's the case. There are specific reasons. I mean, you can see BHP why it went after Osmin. There were specific reasons, and for Rio, there are specific reasons. So I can see that, but it's not a massive changer. At the moment, if you're buying Rio, you're buying on what you think China is going to do. That's all it matters. The rest is, sidetrack. So in reality, I think there's a fair bit priced in on the bounce on what's happening in China. I think you want to wait and see what happens over the next couple of days. Look, I do not think the Chinese are going to suddenly go back after deflating the biggest asset bubble in the world, how much the Chinese property was worth over 3 years, and then go back and pump it now. I mean, it just doesn't make sense. But they could be doing, you can never underestimate the unique policy settings that they can come up with. So if they do something and it keeps things going, especially the steel sector, then you get that. Rio gives you iron ore, obviously, then you've got copper. But what's interesting for me is everyone is diversifying. No one's actually saying, I want to move away from iron ore. But everyone is moving away from iron ore. They're diversifying their earning space. BHP is moving more and more into copper. Rio already has copper. They're trying to do other things, and BHP is doing other things. So you can see how. So as an investor, you should look at them and learn from them. The whole play on the iron ore thing, I think that's going to struggle in the future. The big boys are starting to diversify. You should be diversifying as well. So lithium is an interesting play at the moment. I mean, it's hated, right? It's run into a car crash. Everyone loved it and then held it all the way down. So do you want to jump in right now into Rio? I think if you're there, you're a long-term player, you can hold. If you're trying to look at the cycles, I'd be a bit careful going into the Chinese update because they need to deliver substantial to make these things add up. So I don't see that. So it's a hold at best. We're not holding any iron ore miners. We haven't held lithium for I don't know how many years. And so I'm not there. I'm not even in copper stocks. We're playing copper through evolution because I get a bit of each way.
Yeah, because of gold as well.
Yeah, exactly. But yeah, we're not seeing anything till we get clarity out of Chinese data. So far, the Chinese data does not give me confidence.
There you go then. That's our stock of the day. A double hold for Rio Tinto.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.